Okay, so in this example on GJ, we are going to talk about marking up, how to enter, stuff like that. So looking at GJ on the daily, this is what we see. So we had a huge pin bar rejection earlier on with an impulse correction, another impulse, and then another correction. So as we can see, we have a rejection in this level. By just looking left, we can see this is a major level of rejection. So what I would do on the daily is just identify, okay, so we have a level of rejection here. What I would go do is go down to either the 8 hour or the 4 hour and highlight that rejection. Okay, so it's the time frames are all relative in the sense of like, for example, like one candle equals the daily, one candle equals the 8 hour. It's all the same thing. You're just breaking it down. So if there's too much noise on the 4 hour time frame, which sometimes there is, I just go to the 8 hour. And so it minimizes all that noise, but it's the same perspective. So don't get too confused on time frames because it's the same thing, it's just being broken down. So daily, we want to figure out where the market is headed for the long term move, so the bigger picture, as well as the weekly and monthly. But honestly, like looking at the daily is just fine. If you were to swing trade, like hold trades for weeks, like I'd say like 3 to 4 weeks or even months, then I would be more concerned about the monthly and weekly. However, with our group, we're usually holding trades each week or a couple of days. So, in this sense, the daily is completely fine to look at. So, what I'm going to do is mark this level. So, I am going to draw a zone right here. Okay, so I'm drawing a zone right here. So, let's identify the price quickly. So, what we do is we can drop to the 4 hour. We can take a horizontal ray tool and line chart just to get the approximate number. So we're gonna round it to 250. And so we have a high here where the wick went at around 565. So I'm gonna round that. Let me see if this is too high. Nope, that works. So 148, 570, 148, 250. So in between, so this is where the zone comes in place, okay? So I always put the zone right above that specific number at the horizontal ray because this is the thing. Price isn't always going to hit 148, 250. It's always in a zone. So when it comes up to that resistance level, sometimes it manipulates you, and so sometimes it will reach higher. The reason why they do that is banks are trying to get people to enter buys and then they absorb all the orders, they make a lot of money, and then they reverse the market. So that's how we can figure out how to avoid that and know that, okay, well, price isn't always going to respect that 148, 250. Sometimes it will manipulate and go higher. So in this case, it manipulated around 30 pips. Okay, so the zone is there to say, okay, anywhere in this area, when it hits this 4 hour key level, we can start looking for an entry. Um, so, so like I said, I would put a zone here. Okay, so this is what I'm looking at. So you're not marking over here. Like it's irrelevant. You're marking up where price is currently and where price is going. Like for example, like we have a reversal here and we have a support level here. So what I would do is just take this, and if you want to be completely accurate, like I said, just take the horizontal ray tool, go to the line chart if you want, just to be precise, and then 143, 800. Okay, so this is our zone. So this is all we need for now. for the 8 hour, okay? So we can see on the daily that we are in a bullish trend right now. We have rejection here. So we would just see, okay, what's going to happen next. So if it ends up respecting this 143.8, what I could see happening is we could, since we had a massive impulse to the downside, and if we respect this structure, then what I could see is it going up higher. So the reason why it's coming down here is because of the fact that this structure is being broken. So earlier on we had a test, and then we had a break, a test to this broken structure, and then we had a bullish close to continue up. Now we're coming back down once more to test. So if we test and respect this price, then we could see another movement up. Okay, so just by looking at this, we can mark up on H4, this level right here. And then at any point, if you want to go on the 30-minute, the 15-minute, whatever you want to do to get that entry, that's what we would look at. So we would look at the 4 hour first. This is our 4 hour major key level. It's our retest zone. And then we would go down to any time frame we want. Once it hits that specific price, then we would start looking for an entry around this price, okay, as long as it doesn't break. So let's say we took our entry at 143.800. And then our stop loss would just be right below structure. Again, give it some room to breathe. I do like 30 to 40 pips. Just because you don't want to get stopped out. The main reason why people fail at trading too, one of the main reasons is that they get stopped out and then it goes in the complete right direction that they originally were in. So that's the number one problem with traders. And your stop loss is there for you to say, okay, I'm in the complete wrong direction. Okay, so you need to understand that. You don't want to keep getting stopped out and then having to enter the trade, because that messes with your psychology. You want to just enter once and that's it, and let it run. You don't want to keep getting stopped out and then having to enter multiple times. That's just, it really messes with your emotions, trust me. So keep that in mind. So let's say we enter at 143.8. Like I said, on the 30-minute time frame, as long as we get a rejection, it should, I think it will reverse. Since we had that big push to the downside, it needs to correct. It's at this retest zone. It should honestly go up. So what we're looking at here is potential targets, okay? So I want to draw a zone right here. Okay, so that this is like a minor zone in between this, right? So we had minor resistance here, then it broke, tested, ended up breaking, testing. So our first target I would put here, and then our second target here, okay? So we have to watch how it reacts to this zone. So let's just go on the 2 hour and see what happens. Okay, so it completely blows through this target. So it might honestly end up just going to 148.250. In some cases, if it didn't, what we would need for confirmation is for price to, give me 1 second, is for price to come down here, test this level, and then continue up, okay? So but in most cases, what's happening here is it looks like prices, I hate when it does this. It looks like price is going to just hit that 148.250. So let's just see. Oh, no, it's coming back down to test. Oh. There's our test. Okay, so let me explain this. So we have a level right here and ended up breaking, okay? So it's trying to break above this minor zone. So it broke through, tested, came down, came up, tested once more. It didn't have enough bullish push to go up to the 148, 250 just because we had this massive impulse. Sometimes it does, but in this case, it exhausted earlier, then corrected, came back, respected, and then dropped for a correction. So this is a deep correction. So people would be freaked out by this because they'd be like, okay, like this is still a good amount, 76 pips, but they would be like, oh my God, I'm gonna get out. It's coming back down. It's coming down, back down. But realistically, what's happening is it had a massive impulse. It's correcting, a little bit of manipulation here. And then what ended up happening is it respected price and then shot up to the high at 148, 250. Okay, so it broke, tested, and then continued. So sometimes this is a great example of how this trade could test your emotions, especially with that deep correction. And sometimes you do see this on GJ. So you just need to understand what's happening. So this is why I preach about entering at a specific level and not in between price or not counting on a candlestick. Just because you see a strong bearish candle doesn't mean it's going to keep continuing down. It has to be at a specific level where you're taking the entry, or you're going to get caught up in this manipulation. And you're like, this wick right here, like let's say you enter to sell, this wick right here is 100 pips and then it completely reverses, right? So you need to make sure that you're taking your trade off a specific level. So there's a couple things that you can do. Once you're in this trade and you're entering, you can set your stop loss at break even once it's trending in your direction, or you can set a stop loss in between the trade and take some profit and then enter later on. Like it's totally up to you. You need to figure out in your plan when you're practicing on demo what is working best for you. Is it taking the stop loss at break even, or is it putting the stop loss so that you get at least some profits? So that's totally up to you, and you need to figure that out. So what we would do in this sense, so we have that correction and then move to the upside. So what we would do is just extend our target here. We would extend our target to this, so around 148.5. And then what we would do is look for a rejection in the market. So then going to the daily time frame, we can see that this is a major level of rejection here. So if we don't end up breaking this level, we could see this guy come back down. Okay, so let's just see. So this is the 8 hour, this is the 4 hour. So we tried to break above, false breakout, and we're trying to continue down now. So like I said, anywhere between 148.5 and 148.250 when we see rejection on the lower time frames especially. So we have one hit, false breakout, two hits, anywhere around this area is where we can look for a short. Okay, because more than likely it's going to drop. So the reason why it's consolidating now is because it's consolidated in the past. So we had a huge move up, consolidation, move down, huge move up, correction, huge move up again. Then we have a fake out consolidation. And that's what happens when we have these big moves. So it's testing that 148.250 multiple times. So sometimes that happens, guys. But you just need to prepare yourself. Like, you can't let your emotions get the best of you. You just need to watch the trade. Okay, so what ended up happening is it ranged for, let's see, ranged for 1, 2, 3, 4 days. Okay, so let's say you were in this sell and it kept coming up to your entry. Well, you got to see, if we get a bullish close like this, something like this, where okay, we're going to break above this level, then we take a loss, right? It's not always going to be profit. But if we can see that it keeps testing and closing below that price, 148,250, then we can say, okay, like it's came up for that big impulse. It needs to reject. It needs to correct itself, right? So you just have to remind yourself of that. Sometimes it is annoying where you're in a trade and it's dropping, and then it's dropping, what is this? It's dropping 57 pips, and then it reverses and reverses, and then it's taking a while to drop. Sometimes you'll get in these scenarios, but you just got to trust the process. That's the biggest thing. So it ended up respecting this price. Again, Confluence is that this is a major reversal level. Looking on the daily, looking on the 8 hour, looking on the higher time frames, this is a major reversal level, okay? So that's another thing you have to look at. So it ends up breaking this minor zone, and then what ends up happening is it's trying to break this price now. So let's just see what happens. Okay, so let's go through this. Okay, so it ends up messing around for a bit, then we get a push to the downside, then a correction here, we get a rejection off this level, and then we keep pushing to the downside, okay? So we don't right away hit this target at 143.8. We ended up consolidating because we had that huge push down. Consolidating, we ended up correcting. We corrected in this zone right here because basically what happened, broke through, tested, made an M pattern, double top, boom. Then what happens after the M impulse leg, it starts to correct itself, okay? So just by this double top, this, like, let's say you miss this whole sell, you could get in here, and then your first target obviously would be and then your stop loss would just be right here. And then your first target would be here at the 128,250. So that's a 1 to 7, risking 35 pips to make 249. Again, like when you're entering on lower time frames, like the 30-minute, 1 hour, whatever, you can obviously make the stop loss a little bit more closer. But for me, I like to just, like, it's there just in case. It does give me some manipulation. I don't like getting stopped out at all, so that's like one of my biggest things. But it's up to you. If you want to make your risk to reward bigger, then obviously you can drop down to when we enter on 30-minute or 15-minute, you can make that smaller. Just don't, the biggest thing I preach about is stop getting stopped out all the time. Like if you're getting stopped out all the time, you need to increase that stop loss. Okay, and so this would be the first target, and then we would look at larger targets. If this ended up breaking, then we would look at this target. All you're doing is looking left to see where the market is rejecting. Okay, so let's go to 4-hour time frame. The market is going to correct itself now. Okay, so we have a correction all the way up to the 146.3. Okay, so we got a rejection off the off this level, literally to the T at 143.8, literally to the T, and then it rejects. Okay, and then what ends up happening is it comes back up to our previous level. Okay, so it comes back up to our previous level, corrects right here. Okay, so impulse correction, retest the structure, continues up, okay? So then the reason why it's testing here is because it's testing this structure right here. Okay, so then we move it there, so it ends up respecting here, then tries to come below here. It's repeating itself every single time. So respects here, drops, retests this structure, then continues down. Then false breaks out, comes back down, comes back up to that high, makes an M, makes a double top, then drops again. Then we're back down to this level. Comes back down to the 143.8. And then rejects from it once more. And then ends up breaking that 143.8. So then we have a gap here over the weekend, and then what ends up happening is it literally just keeps dropping, okay? So then again, we would look at our lower targets and we would say, okay, where do we have rejection? All right, so we have rejection in here, and we also have rejection in here. So what ended up happening, it comes to this price, fills this, then corrects, then continues down. And then if it ends up breaking this, it's going to continue down to the next target. So it comes up, tests, respects, closes below that price, and then continues to drop. And then same thing, you're just looking left to see what's happening. Okay, so it's really, really easy, but the thing is that you need to allow yourself time to understand this, right? Like it takes a while because there's so much information to grasp. And so back testing is key. Like this is the stuff you need to do. And then like I said, on top of it, with other videos that I've shown, you need to understand how the market moves. So like New York session, it moves this way. London session, it moves this way. This at this time it moves this way, stuff like that. I've already explained that in the other videos, but this is the kind of stuff you need to do in order to make yourself a pro, seriously. So I hope that made sense. I'm just going to keep going through examples like this in other videos, but that's the main thing is like you want to look at the trend on the daily and see what's happening. Then you just want to break it down on the 8 hour, the 4 hour. Once it hits an H4 zone, you want to jump down to whatever time frame you want to enter at. But you have to look at two time frames. You have to look at a higher time frame and you have to look at a lower time frame to enter to get that precise entry.